Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is the earnings special edition. And our focus on this edition will be on the earnings of Godrej Consumer Products Limited, the company behind popular brands which include Synthol, Kit, Goodnight, and Easy, and many, many more. Now, the company has reported its Q4 numbers, wherein on the bottom line front, we've seen a consolidated net loss of 1,893 odd crore rupees for the March quarter. And this is as against a net profit that was seen in the previous year, same quarter, of 452 crores. Now, this includes a one-time exceptional loss of about 2,376 odd crore rupees. The revenue for the company has stood at 3,385 crore rupees, which has seen an uptick of 6% on a year-on-year basis. The company has also declared a dividend of 10 rupees per share. Now, to discuss more insights from the quarterly earnings as well as an outlook going forward from here, I'm now joined by the top management of the company. Mr. Aasif Malbari joins in. He's the CFO of GCPL. Welcome, sir. Thank you so much for taking the time out for this discussion. First up, if you could explain to our viewers, sir, as far as the exceptional item because of which the loss has been reported on the bottom line, what exactly is it? And is it just a one-off?
Sure. So we are very committed to ensure that we have a profitable growth in the Africa business. And we are clearly spelled out in a strategy that we will focus on ensuring a profitable growth in Africa. As a result of which we did a strategic refresh of the business there. And it was important that a few of the countries where we had very subscale businesses, we had to reorganize it in a different way. So we kind of reorganized that in a different way. We had kind of sold some of the countries where the business was subscale. That kind of puts us in a very good stride to kind of enhance the shape of the business in Africa going forward. As a result of which we had to take an accounting impairment in terms of the total carrying value of the asset on the balance sheet and what we had kind of were carrying. And hence it's a one-time cost. It's an accounting cost. This entire reorganization is actually cash positive. We would actually release upwards of 200 crores of cash. And hence, it's more an accounting loss, and it puts us in a good shape to improve the profitability and grow the business in future.
Okay. So could you also give us a detail on to how was the demand in Q4, especially the rural, recovery? Were you seeing some green shoots in Q4? And also, what's the outlook on demand going forward?
So we've had one of our very strong quarters in Q4. We, at an overall level, we delivered an underlying volume growth of 9%. And this was the fourth quarter of strong high single-digit underlying volume growth, which we've done. We closed the year with a 7% underlying volume growth. When it comes to India, while the underlying volume growth was close to 7%, we delivered an overall growth of 15%. It was on a back of a good quarter, which we also had in terms of Park Avenue and Kama Sutra. So per se, from a growth perspective, a good quarter. We're happy about it.
Okay. On the margins front, sir, if you could detail for us, where are you at and how do you see the margins band expanding in FY25?
Sure. So we've had a good year in terms of profit expansion. From a year point of view, we delivered an EBITDA growth of 21%. And in this quarter, we delivered an EBITDA growth of 18% at a total consolidated level. And if you see the growth in profits, it's been again very broad-based in the quarter. India, Indonesia, and Africa have delivered good improvements in profit. Margins have stepped up compared to last year after a significant step up in advertising spends.
Okay.
We have stepped up the working media spends. And most of the margin expansion has come in either through the lever of an improved mix with higher margin and higher margin countries kind of significantly doing much better. And on the back of cost reductions, which we've been able to do. So we're quite happy in the way in which our P&L is shaping up. More spends on working media and improved margins. So we're happy with the way it's kind of looking.
Okay. Sir, do tell me, as far as pricing, you were saying that you've taken some cost cuts on several of your products. How is it likely to shape up going forward, especially on the back of the kind of prices that you're seeing on the raw material front?
Sure. So we are seeing now a bottoming up of the commodity prices, which has happened. Over the last year or year and a half, there has been a downward spiral in terms of the input raw material prices. And we were passing the benefit of those to the consumers, as a result of which our top line growth were lagging behind the underlying volume growth. But over the last few months, we've seen that commodities have started seeing mild inflation. Palm oil has seen increases. There have been an increasing overall in the other cost base, as a result of which we have taken up price increases in April. And
Okay.
they will kind of, the effect of the lower prices, which we had kind of passed on last year, will start kind of now anniversarizing in the next couple of quarters. So in second half of this fiscal year, we definitely should start seeing sales growth being ahead of the volume growth.
Okay, sir, could you detail for us how much price hike have you taken and across which categories?
We've taken price hikes across quite a few of our products. We've done that in terms of personal wash. We've taken a few price increases in terms of even the other rest of the products. So it's been broad-based increases to kind of offset some of the cost increases.
Okay, and any percentage to the tune of which you've done that? Any range band?
It's still kind of going in.
Okay.
Depending on how commodities settle in, we would kind
Sure.
of navigate that. Yeah.
Sure. As far as your volume growth is concerned, for Q4, you've grown at about 12%, and for the entire fiscal, you've grown at 10%. How do you see this growth vis-a-vis FY24 in FY25, and quarterly basis, how do you see it panning out?
So the overall growth of 10% is broken up into some benefit which we got because of the acquisition which we made in the beginning part of the year. So that 10% is on a reported basis. We've grown at 7% on an organic basis. We do definitely see ourselves sustain a high single-digit underlying volume growth going forward.
Okay. Any particular reason why it will be only a high single digit and not surpassing the 10% mark?
No, that remains a North Star in terms of growth for us. 10% is definitely a North Star which we keep as a company.
Okay.
But yeah, as things kind of stand, we definitely should we'll be starting off from there.
Okay. So in terms of verticals performance, how is your performance as far as home care category and personal care category is concerned?
Sure. So in home care category, we've seen a good benefit in terms of liquid detergents. We've also kind of seen a good growth momentum coming onto the air freshener business. Both have been doing well for us, and they continue to sustain good growth momentums. In terms of household insecticides, we had launched the Gunnar Agarbatti, which has been received very well by the market, and we are seeing good repeats on that. So overall, all categories are showing a very positive strengths.
Okay. And as far as your key product growth drivers are concerned, which have been your top performers and where have your market shares been exceedingly well?
So at an overall level, we have been gaining market shares on a large part of our portfolio. Yeah, on a majority of our portfolio, we've been gaining market shares. And I think as we see some kind of improvement in the rural demand environment, we hope we should be kind of getting that as a tailwind to the business growth. Yeah, there is a fair amount of expectation that with a good monsoon ahead and with increased spend by various quarters, yeah, we should start seeing a more positive demand environment in rural.
Okay. Geographically, sir, speaking, you did talk about initial in your first answer as far as the African business is concerned, but even your Indonesia business, the other markets as well, internationally, how have they grown and what's the outlook there?
So Indonesia business has had actually a very good run last year. It grew the volumes by double digit, and price growths were higher than that. So it's had a very good run. We have put in a lot of new mixes in Indonesia, and the core of the business is doing quite well. A lot of transformation has also happened in terms of go-to-market, etc. And hence we are kind of hopeful that all of those actions should support a sustained growth in Indonesia.
Okay. Any product launches that are lined up for the current and the next quarter as well as for FY25, sir?
Sure. So we're just launching the Synthol body wash foam. It's a very unique product where consumers are able to experience the benefit of a liquid but in a foam format. Yeah, that is just being put into the market, and we're quite hopeful that that will be received well by the consumers.
Okay. Also, sir, there are also on a macro basis, I wanted to understand, India has now introduced mandatory regulations for recycling and reuse of plastic packaging starting FY25 to control the plastic waste menace. Would you see an impact of that, if at all, on margins? And would you have to, start with some of your packaging on that front?
No, so we welcome the steps. As a company, sustainability is very, very high on the agenda, and we welcome the steps. And we're taking a lot of actions which are way ahead of the regulations on a voluntary basis. It's a step in the right direction, and yeah, we're already working on it. I don't see any challenge in terms of ensuring that we comply with these ahead of time.
Okay. And also, sir, just very recently, we have seen that the group at large has seen a division take place. Anything, will be important for the investors to really watch out for in the coming quarters? Will it take some time for, things to settle down? And will there be any kind of an impact on the financials, if at all?
So there has been no impact in terms of GCPL Limited. The company was not part of any settlement. Whatever we were informed by the promoters is something which we've kind of shared to the stock exchange. But yeah.
Okay. So overall, speaking as far as FY25 is concerned, would you be also looking at entering into any fresh categories of products?
Yeah. So we keep looking at new opportunities to increase the addressable market. Yeah. So we'll kind of definitely talk about it the moment we launch something new in the market.
Okay. And also, so speaking of the kind of outlook that you will have in FY25 vis-a-vis FY24, do you expect FY25 to be a better year in terms of both top line, bottom line growth as well?
No, so the idea will be, as we spoke about, to sustain a high single digit of volume growth. And when it comes to profit, we have had a good run in terms of improving our profit and our margins. But we will definitely look at how we can kind of further improve the profitability on some of our patches like the Africa business, the Latin America business, and the overseas business to ensure that we drive profit growth ahead of revenue growth. So yeah, that is something which we'll definitely try to do.
Okay, well, all the very best, sir. Thank you so much for speaking to us on business today and explaining to us as to what contributed in this quarterly earnings as well as an outlook going forward. Here's wishing you all the very best for the upcoming quarters and hoping that we can catch up again to really understand more about the industry trends as well as the company's vision going forward.
Thank you very much. Thank you for having me on the show.
Thank you so much, sir.